Duer.
Okay. Welcome to Real Estate Hustlers Podcast. I'm your host, Josh Appleman. Today we are joined with Hayden Duer, specializing in property acquisitions, underwriting, business development, managing $28 plus million in real estate across California and Arizona, hands-on experience from maintenance to multifamily ownership. Hayden, we appreciate you coming on the show today. If you could let the listeners know a little bit more about yourself.
Yeah, I am. I'm property and asset manager. I kind of got started in property management. My family has owned and operated a few different asset classes: single family, office, and retail. And I got into the business, and I manage my family portfolio, as well as I've started my own portfolio of multifamily um, uh, over the last 18 months. So.
Very cool. So you grew up in the industry in a sense, correct?
Yeah, absolutely. My grandpa was invested in real estate slightly, and then my dad kind of took his portfolio as well as my grandpa's portfolio and really expanded it and scaled it for the family. So.
Very cool. Let's talk about that. So what is scaling? How big does that mean as far as units or real estate asset type? Tell us it all.
Yeah, so in terms of total units, we're somewhere around between 40 and 50. But we have single family, quite a few single family in Sacramento area as well as Arizona, and we also have office and retail in Arizona or California and Texas. So it's started in around '08 is when we really started to, my dad really dove in. He had a local glass and screen repair business in my hometown, and he owned the building that he was operating out of, and realized one day that he could rent the building for more than he made per month. So the next day he sold his business, jumped all into to real estate, and went hunting. So
Nice.
and how
Very
got
cool.
started.
How is the market in California for real estate?
Right now, I mean, I coming from my property management background. I manage apartment buildings from 150 to 300 plus units. Um, it's challenging for sure, especially from the property management perspective and ownership perspective. It's challenging, and it's only gotten more challenging over the last, I'd say, decade. So definitely from that perspective. But in terms of being a solo one-off, doing a few homes or buying a few homes and single families, it's been great for the appreciation, and now we're taking the appreciation and shifting it into different states. It's kind of where our portfolio is shifting into. So.
Got it. What kind of oversight are you deploying? If you're and where you're at, then you've got assets in other states. How do you make sure that it's being ran like you'd run it?
Yeah, so we've got a really good system. We have some really good boots on the ground in terms of maintenance and all assets, or I mean, sorry, all facets. So HVAC technicians, everything. So we've got a good systems in place in each market that we're in. So we feel really confident. We're very hands-on. My dad and I manage a majority of the portfolio, and my dad helps as well. He's kind of being phased out so he can enjoy the fruits of his labor, and I'm stepping in. So we've got some good boots on the ground in the markets, and we are connected with the tenants specifically. We also have in a couple different properties, we have property managers, and we just manage the property managers. So.
Got it. How big are these? So yeah, then you're doing asset management, which is part of the talk today, of course, because there's a huge difference between property management and asset management, and you really have to have both. How big are these properties that you're putting property management on?
They're retail spaces, so retail and office
Okay.
spaces. So they're anywhere from 3 to 10 units or businesses within a business park.
Okay, got it. Um, there's not a whole lot of noise in business retail, is there? As far as like I mean, you got the tenants, termites, toilets, like we know in multifamily,
Yeah.
but retail is pretty much plug and play. I mean, that's their they don't pay the rent, they don't have a business, so
Right.
it's less of a heavy management role, right?
Exactly, and especially if you can get some triple net leases in there, that makes it all the better. But I mean, there's definitely some of the tenants and toilets aspect to it, but it's not, yeah, definitely not as hands on as the single family space or the residential space, I should say.
Yeah, for sure. When you were managing, so are you all currently still managing 150 plus unit complexes or no?
I'm not. No, I stopped that about 3 years ago, and jumped into my own business and started buying assets, or buying multifamily as opposed to managing it. But I did that for about 8 years, so 7 to 8 years.
Got it. But you learned what you learned there. You deployed and implemented in your own business that you're
Oh
doing
yeah,
now.
yeah, absolutely. I out of college, I asked my dad what I needed to do to get into real estate, and he said learn from the ground up. So
Yeah.
I learned. I was a maintenance technician, and then I got into leasing, got into the office, became a manager, and managed for a couple of years. So a few years. So
Yeah, that's 100. That's perfect because then it's all encompassing, and then really no one can get one over on you. You
yeah.
kind of you already know firsthand. Tell us some of the lessons that you've learned working on the from the other place that you've been able to utilize now on your own side.
Yeah, absolutely. Aside from the reporting, which was a huge thing, just kind of getting a better understanding of all the reporting that goes into property management and ownership, just staying on top of and being a more active asset manager and operator. Really having the ins and outs of the industry, knowing how property managers work, knowing how maintenance technicians and maintenance supervisors work, and how they're incentivized has really played a big role in how I find my property management companies, how I vet my property management companies, and how I stay active. And we have weekly to monthly calls with our property management company, depending on where the project is. And so it really it's played a huge factor in all the knowledge. And to your point, there's not a whole lot of getting something past me at this point, because I know the excuses. I know you know uh, the roles and that everyone plays. So
Yeah, for sure. And I think that there's a big misconception when it comes to being a landlord. Quote, it's not just sitting back and letting the rent roll in. There's so much more to it. There's the whole management aspect of it, and the reporting, and making sure that your units are filled, making sure that you are achieving market rate rents, and making sure that your service level agreement between you and your tenants are being withheld or upheld. So
yeah.
it's all encompassing. Then when you create a company around it, now you professionalize it. Now it's your duty and obligation to make sure that you're on top of it,
Oh yeah.
and things can certainly it can start to compound if you let it go too long. Um,
Absolutely.
why did you all decide to? You've got firsthand property management experience, so why would you take that role and give it to somebody else?
So for us, we are managing, or we are owning out of state. So we have a property
Okay.
in Arizona, and we have a property in Missouri. And so in order for us to focus on the acquisition side, we needed to outsource the property management. And for me, in terms of leasing and the day to day, I feel like uh, my strengths are better suited for growing the business right now. So eventually, once we have some scale in a particular market, the plan is to vertically integrate. But as of right now, we outsource it, and we've got some great property managers that do an amazing job, and are super responsive, and have made some great decisions and great moves for us. So
So what are you doing as far as asset management and compared to what property management would do? What are you putting on top of the property management?
for us, what I like to do is a lot of planning, future planning, and budgeting for the specific for each specific asset. A lot of I don't do too much day to day, but I will manage The lease expirations is a big one, especially on renovations. You need to make sure that you're cash flowing so that you don't, you don't run out of cash and you don't get a flood of 5, 6, 7, 10, 12, whatever it might be, lease expirations and people moving out. So a lot of that plays a big factor in making sure that making sure that everything is being handled and being handled properly. So a lot of oversight on in that regard.
Are you using any technologies, any AI, anything that helps assist you in the asset management piece?
Not currently. I mean, we utilize the property management softwares that each company that we use has, but nothing currently on the asset management side just yet. So
Okay, there's a good one that I like to pull reports from. It's called Hello Data, and it basically it pulls in the data aggregates the data from basically every listing online and it pulls the data in and finds out how much they're leasing up for when they go offline, fees and rents that other
hmm,
properties are charging. It helps you really stay on top of the market to help achieve premiums. Make sure you're not leaving money on the table. Now that doesn't go into retail, of course. So retail, I think, is that data is a lot more secure unless you have CoStar calling you every day asking how much you leased it up for.
right,
Uh,
right.
what kind of softwares are your property management companies using?
Um, Appfolio is a big one, and then we have one that's I believe it's Rent Manager. We just started with. It's not too many people have heard of it, but um, it's
Yeah,
pretty robust with the reporting and whatnot. So just figuring that out is been a task, but I like it.
got it. So with asset management, you have access. You request access to go into the property manager's software and then pull your reports directly from what they're using.
Yeah, there's only so many reports that asset managers or owners and operators can pull, but if there's reports that we can't pull, then we ask for it specifically um, from the management company.
Got it. Okay. Especially if they're in between reconciling all the accounts and making sure everything's um, just reconciled. Got it. Okay, cool.
Absolutely.
How did you all, well, I know why you bought out of state, but how did you find these properties and what made them a good deal?
Yeah, so we hit the ground running with broker relationships. So I've spent the last 2+ years, talking with brokers on a weekly basis. Same, we uh, we get boots on the ground in the specific markets. We go out there, we meet face to face with the brokers, and a lot of broker follow up. That's kind of how um, where I've started and where I've kind of developed a lot of relationships. And they've got access to a lot of or all of the sellers and the property owners in the market. So why circumvent them when they can send you a great deal and do a lot of the work for you. Is kind of my mindset around it. So building great relationships with brokers, and there's some great brokers out there, and we work with quite a few. So
Got it. Um, okay. So how did the broker sent you the information on the property, you underwrote it. What made you want to move forward on these? And these are retail strip centers, correct?
no, these are multifamily.
Okay.
This is apartment buildings.
Okay. How
Uh,
many units?
so our first deal was 10 units, and then this deal we just acquired was 34 units.
Oh, cool.
So we got
Okay.
44 multifamily units, and then an additional. My business is geared more towards multifamily, whereas the family portfolio is
Retail.
retail and office. So
Got it. Okay, so same broker that sent you both deals, or different brokers?
different brokers, two different markets.
Okay, so you underwrote it. Why do you like the deal? What made you want to move forward with it? Out of state, it's
Yeah, out of
distant.
state. So the first deal was in Tucson, Arizona. We like the fundamentals in Tucson. It's we underwrite for cash flow and the deal making sense from day one. We want value add and going in and forcing some appreciation, but more so rent appreciation so that we can cash flow. So the first deal was in Tucson. We liked the fact that we're 60% filled and we can still cash flow, and then on top of that we can drive rents. We can almost double rents for the additional units that we do renovate. So we like we like that market. There's also some appreciation going on. It's not as cyclical as a Phoenix or a San Diego, but it does have decent appreciation. Our other market is Kansas City, Missouri, that we really like. Similar fundamentals, similar cash flow heavy type markets that we really enjoy, and our investors are geared more towards cash flow. So that's why we like.
That's what I was going to ask you too. As far as how do you all do the equity? Was it the balance sheet on your all's end or investors? And you just answered. You brought in the investors.
Yep. Yeah. We syndicated both deals with our network, friends, family, and our network. So.
Okay. All right. Good deal. Do you mind tell us the purchase price, renovation budget, and then what the reversion looks like?
Yeah. So the first deal was the purchase price was 1.34 million. We added just over $100,000 in equity, and that'll be a 5 to 7 year hold. We've owned it for about a year. It's fully stabilized now and cash flowing. We plan to exit anywhere north of 2.2 million. So
is that the 10 unit or the?
That's the 10 unit.
Okay. Yeah. Wow. That's that real estate is hot out there then, right?
Yeah. And I think, the rents have stalled in a few different markets, Tucson included, but I do see that rent can't stall for too much longer in these types of markets. They're college towns. There's a lot going on in these towns in terms of infrastructure and businesses. So that's again why we chose Tucson, and it's not too far from where I'm down in Southern California. So it's a quick flight. So
what were each unit renting up for when you purchased it, and then how much are you going to push it to?
Yeah, so each unit was renting from the one bedrooms were renting for about just over 1,100, two bedrooms just over 1,200, and that was a year ago, and now our one bedrooms are 1,250, and our two bedrooms are renting for just over 1,400, 1,425. So and there was a few units that were renting for 650. So we went in, renovated those units, and got about or over double the rent that we were getting. So, and then the second deal, we just closed on it in June. It's a 34 unit project. Where it was 33 units. We're adding a unit of the laundry room. We're adding a unit, and we're also going in and renovating a light renovation to each unit to get about 150 to 175 dollar bump from market. So and these units are already below market. So overall, probably about a $200 on average increase.
What is the cap rate there?
The cap rate on that one was just over 7%. Or I was about 7.25% for that one, and the one the project in Tucson was just under 6%, and this was bought early 2024, so just under 6%. Both value add projects. So.
These interest rates come down, and the cap rate goes down, so then you can possibly get a better valuation too. That's not bad.
That's the plan.
That is the plan. We've been waiting for the interest rate, so that's for sure. I think the 10-year Treasury is trending down, so keep that posted. Cool, very cool.
Yeah, not banking on it, but that would be great. That'd be a great.
What do your all's renovations include? What all are you doing?
Yeah, so it's mostly cosmetic, but in this project in Kansas City, we're doing some cosmetic. We're adding washers and dryers, so that'll add about $50 a month in rent over and above without washers and dryers. And then we're upgrading the putting in a new roof, which was put into the pricing of the project or factored in with the pricing of the project. And then just doing kind of a cosmetic curb appeal exterior renovation. So a lot of that is kind of decided in escrow or before we get into escrow, and while we're in escrow, what our plan is, what the average rents are in the market, and where we can take the rents. And then there's going to be a lot of plug and play as we go, but the share of work has been completed to date, and now we just go and execute. So
got it. Are you all taking any subsidy tenants, or is it all market rate?
All market rate.
Okay, very
Yeah,
cool.
yeah. Found, and another thing I learned in property management that if we can avoid those types, we accept them. But if we can avoid subsidy rent, uh, we certainly will look to do that. But
Yeah, I think if you have a percentage, it's good because of course you don't want full subsidy if
sure.
you are going to accept it. At least have some skin in the game on the other end, and then it's just screen really really well.
Hmm.
Make sure, and then of course, like anything else, manage like with an iron fist, and that goes for
Yep.
anything on the property. Trash, debris, towels hanging on the railings, just keep it tight, and
Yep.
the property will thrive.
Yeah.
And I like how you're doing a curb appeal. That's important. It's you're renovating. Some operators will renovate the interior and do nothing to the exterior, and it's to me it's totally pointless because you're going to want to pull up to what you expect to go into.
Yeah, yeah, exactly. And especially if you're trying to increase a tenant base, if you have a kind of a old, dingy looking exterior, tenants are not gonna. They're just gonna turn around. They're not gonna take a deeper dive. I learned that firsthand with the properties that we owned. It changed owners that we managed. It was a 190 unit apartment building, and it changed. The ownership changed hands, and the first thing they did was paint the exterior, and I see it from every time I drive on the freeway, and I'm like, that property looks 50 times better
Yeah,
than it did, and all they did was paint the exterior, and
yeah.
it's amazing what that does to perception of a property
It
too.
really, I mean, it's just optics because things get dated, and then you just gotta. I think it's the operator's responsibility to just lift the property, keep it lifted,
Yeah,
and the next guy will come, spend money, and lift it again. It's just, but
yeah,
it's just, but the good buys are the ones that don't do anything to the property, and it should be the
yeah,
good buy, and you come in and
yeah.
do what they didn't do.
Yeah, and one thing I did want to mention, now that we got into it about, or that we talked a little bit about some of the systems, or the systems that we do use on the asset management side. I completely spaced, but we use Onsite Analytics. They're a great company that um, they do maintenance, and they're uh, chip. They do quite a lot of data that they work on, that they can save a lot of money on maintenance, and a lot of money to your bottom line. But Onsite Analytics is a great company that we use.
What kind of like rubs, or what kind of maintenance can they save? And I say rubs, like monitoring if there's any water leaks or that
No,
sort of.
so it's a software, or sorry, a hardware chip that you put on, say, the exterior, say the door frame, and you go up. Any maintenance guy can go up, tap their phone to it, and it's all the data within the apartment, the age, the warranty information on all of your appliances, a lot of appliance information, and then they run data, and they give you a lot of information on, hey, should I replace, if you have 150 units, and you're looking to potentially replace your refrigerators, they've got all that information of, hey, I want to, should I replace these refrigerators, or should I just do maintenance, and what's my ROI on doing either, and they can give you that data, and run reports for you. But it also gives, again, like I said, all the warranty information, all the the work orders that have been done, so it's much easier for them to identify what's been done to the unit, for each. If you're using different vendors, a lot of times, especially these one-off, um, or these smaller projects, you've got two or three or more vendors going into each unit, and it's a lot easier to be like, oh, well, this is what was done in the past, so it could potentially be this, or so
I like that. I'm
identifying those
looking
things.
at the website now. That's I've never heard of it, but I like it. I guess it's setting it up initially, the one-time deal to get every unit set up to where now you're just rolling everything forward. When's the last time the air filter was replaced? When was
Yeah,
the like you said, maintenance on the HVAC, the water heater, um,
yeah,
disposal, those sort of things. I mean, that could be handy. That could be really handy. And then it's just
yeah.
alerting you when you need a filter replaced. They're on. I mean, right now we manage everything in Appfolio, and then we set up reoccurring work orders to change the air filter
Hmm.
quarterly. But I mean, if you've got that
And
sort
that
of data,
it integrates with Appfolio and a lot of the major um, property management softwares, and
okay,
so it's yeah, it's super.
Yeah, I
super
like it.
robust, and I really enjoy it, and it's saved a lot. And for example, I'll give you one quick example. We were looking to do either a stackable washer and dryer in this 34 unit, or an all in one, and we had to do the plumbing and install on the stackable, and we didn't have to do the plumbing for the all-in-one and the venting. So it would have been cheaper, but they gave a thorough report, sent it over to us, and said it would be cheaper throughout the whole project for for 5, 10, 15 years of ownership if you were to do the stackable washers and dryers. And here's why. And they
That's interesting.
laid out why.
Huh.
So it also helps with a lot of decision making process on your appliances. So
I was looking at the all ones, and there's a model in which it's hardly ever available because it's always sold out. But
mhm.
what was the reason it said it would be cheaper to have a stackable versus the all-in-one?
A lot of maintenance, and in terms of if it's a one time doing the plumbing, and once you get the plumbing set up, which is might be a little bit more upfront cost, but the maintenance and replacements was going to in the long run cost you a lot more, because there's more frequent turnover on those stack or on the all in one.
Okay. So you all put the washer and dryer in the unit, then you rent it back to the tenant?
So for this one, we are going to just do it on the or replace as we go when they're vacant. But we've tossed around the idea of putting in the washers and dryers for our current tenants, and increasing their rent a little bit, or increasing the rent when their lease comes due. But
Yeah, I think it would be hard to just give them a washer and dryer versus them kind of owning, well, not even just renting it back to them. That way, it's an amenity, yes, but you still need to get your cash back that you invested too. You're
yeah,
gonna have more water too. Your utilities are gonna go up, and then you're adding costs.
yeah.
I'd rent
Yeah,
that.
it's a strategy that I've seen that people have done when leases are coming due, in a couple of months. Hey, we're going to give this to you for free for a few months, and then just know we're going to increase your rent plus another $50 because we just added the washers and dryers. So adds
Yeah,
a little bit of a boost, and maybe keeps turnover or turns keeps turnover down a little bit. So
yeah, that's a gift. That's a good one. I like it.
yeah.
Very cool. Awesome. Hayden, if somebody wants to get a hold of you, learn more about you, possibly invest with you on your next deal, how can they reach out?
Yeah, so our I'm on all the social media, but LinkedIn and Instagram, it's just Hayden Duer, my first and last name, or our website. We're at duerurakami.com.
Awesome. Very cool. I appreciate the conversation.